Life in the USA, Banks in the U.S. Read to you by Carol Brigham. In the United States, there is one central bank and thousands of smaller banks. The central bank. The central bank of the United States is called the Federal Reserve, the Fed. It was started in 1913 because people were worried about local banks. There was no guarantee that the local banks were being responsible with people's money. If the local banks had trouble, the people who had money in those banks would lose their money. The U.S. government started the Federal Reserve to create rules for local banks and help local banks if they got into trouble. Today, the Federal Reserve orders new bills to be printed and coins to be made, sets interest rates, watches over banks, and helps regulate the U.S. financial markets. Smaller banks. Some of the smaller banks in the U.S. are national banks. They have national, or NA, in their names. They can have branches all over the country. Most of them have branches in multiple states. Some of the smaller banks in the U.S. are state banks. State banks cannot have national in their names. When they started, state banks only had branches in their state. Now, they can have branches in other states, but most are still much smaller than national banks. Types of banks. There are different types of banks in the United States. The most common banks are retail banks, commercial banks, credit unions, and online banks. Retail banks are the banks people use for personal banking. People can open accounts, deposit money, and withdraw money. These banks also give out credit and debit cards, loans, and financial assistance. They have branches in different areas, so it is easy for people to get to them. Commercial banks are mostly for businesses. These banks have the same services as retail banks, but for businesses. Most people do not use commercial banks. People who want to put their money in a credit union must join the credit union. People who join credit unions are called members. Credit unions are owned by the members. Credit union members usually have something in common. They live in the same area, do the same kind of job, or belong to the same church or union. Credit unions usually have the same services as retail banks. People can open accounts, deposit money, and withdraw money. Credit unions may also give out credit cards, loans, and financial assistance. Credit unions are smaller and give better interest rates on accounts and loans, but they may not have as many branches. It may be harder for a person to get there. Some credit unions are only for people in the military. Online banks are the same as retail banks, but they do not have branches. They do not have any buildings for people to visit. All their business is on the internet. People use computers and smartphones to do their banking. Online banks are becoming more popular as more people do things online. The biggest problem with online banking is that a person cannot go into the bank to talk to someone if there is a problem. Some people also worry that online banking is not safe. What type of bank is right for you? It is important to choose the right bank. Most people choose a bank based on the services it offers and the location of the branches. Some people look at the interest rates the bank offers on savings accounts and investment accounts. Some people look at the fees the bank charges. Some people like big banks. They think that big banks with more customers are safe. They may choose a national retail bank with branches all over the country. Some people don't trust big banks. They think their money is safer in a smaller bank. They may choose a local retail bank or a credit union. FDIC and NCUA. The Federal Deposit Insurance Corporation, FDIC, and the National Credit Union Administration, NCUA, protect your money. Congress started these agencies to protect the money that people put in banks. They wanted people to trust banks. The FDIC watches banks, and the NCUA watches credit unions. These agencies make sure banks and credit unions are following the rules. They say the government will protect people's money if the banks or credit unions fail. It is a good idea to choose a bank that is FDIC insured or a credit union that is NCUA insured. The U.S. government will protect the money in your account if your bank or credit union goes out of business. The government will pay people the amount of money in their accounts if it is below $250,000. If a person has more than $250,000 in the bank or credit union that goes out of business, the government will only pay them $250,000. Join us next month for U.S. banking, the types of bank accounts, and opening a bank account in the U.S. For more information about Easy English News, or to subscribe to our digital or paper copies, visit our website, easyenglishnews.com.